Assalamu alaikum. Good morning, everyone. Welcome to my YouTube channel. I am Engineer Salman Ahmed Khan, and today in this video we are going to discuss about the budgeting and planning in the industry in the categories of the CAPEX, OPEX, and MRO. As you all know that in order to control the organization cash flows, it is very much imperative and essential that the organization should work on developing the budgets and the planning for their categories of the CAPEX, OPEX, and the MRO. So let's move ahead and discuss about the budgeting. So basically, the budgeting involves the coordination of the financial and the non-financial uh, sections to satisfy organization goals and the objectives. Now, the budgeting process involves for the future profitability because earning a reasonable returns on resource use is a primary company objective. Capital budgets evaluates long-term capital projects such as addition of the equipment or relocation of the plant. As I said that to control the organization cash flows, it required budgeting. So budgeting involves the coordinations of the financial and non-financial planning. And of course, while we are doing the budgeting, our prime objective is that we need to do the planning, we need to do the coordination, and we need to do the controlling of the cash flows. While we are doing the planning, it's mean that we must have a detailed plan related to the production, that how much production we are going to do in a year, and that plan should be in form of the consumption analysis, forecasting analysis, or other method, moving average methods, or based on your sales and operations planning. Now, based on that planning, you plan for the plant and machinery spares, raw materials, and other expenses required to operate your company business operations. And that planning is done through the coordination. And the coordination has been done through the different department stakeholders within their teams in order to have the effective planning and implementation of the budget. When you do the planning and the coordination, your third thing is to control. Control is necessary to ensure that plan laid down in the budget are under control in terms of the finance and the cost. Once you made the budget with the proper coordination of all departments, the third thing is that controlling. Controlling what? Controlling means you have to now control your budgets within the set parameters of every department's KPI in terms of the issuance of the consumables, raw materials, spares, and the other operational expenses. So this is basically an overview of the budget, that why we do budgeting in the industry. So the factor involved in making the budget are obviously the top management supports. Without top management support, we actually can't make the budgets, and for that reason, the top management support is very essential, very much important, because the top management give you a vision or a kind of a mission that what production they are going to do in a year, or they give you the 5-year plan, 2-year plan, quarterly plan, or 6 months plan, etc. So all of the department participates in the goal settings and they actually communicate the results. And there must be also flexibility while making the budgets, because when you make the budget, there are numerous things involved, like fluctuation in the rate of the exchange rates, in the shipping logistic freight sides due to any global challenges while doing the supply chain. So these kind of flexibility should be keep in mind while preparing the budgets. So before I start directly that to the templates of the budgets, let us discuss that what is CAPEX, OPEX, MROs. Lots of people still have the confusions in these expenditures. So I have made this slide to, to give you a basic understanding of what is CAPEX, OPEX, and MRO. Now, when we talk about the capital expenses, CAPEX planning, or CAPEX budgeting, it means that these are the funds used by the company to acquire, upgrade, and maintain industry or the plant. So mostly in this expenses, there are those items who have a life greater than 1 year. When I talked about those items having a life greater than 1 year, it contains motor, drives, pumps, cylinders, you can say the pumps. So these are the part of the capex. Now, if I talk about the OPEX category, OPEX is basically the ongoing cost for running a product, business, or industrial operation. Basically, it is the cost of providing the consumable or non-consumable parts. Mostly those items which are having the life less than 1 year comes in the OPEX categories. I have presented a picture here of the different spares like shafts, seals, bearings. It could be consumables related to the raw material. It could be related to the daily expense, administration expenses, logistical expenses. So these are the operational expense expenditures. Now, what is basically material repair orders? MRO may include spare parts, equipment such as pumps and the valve that can be repaired. To give you an ease of this picture, you have a motor in the industry, you have a cylinder in the industry, you have the pump in the industry. Since they have a life greater than the 1 year, so obviously when they require any kind of maintenance in between their operations, you need to change their either bearing, you need to change their winding, you need to change their impeller. So that category comes in the MRO, which means the material repair orders. And for that scenario, we also make the repair budgets for our capex related items, phase items that can be repaired within the industry. So this is about the difference between the CAPEX, OPEX, and the MRO. If there is any question, you can write down in the comment. Now, CAPEX expenditure. Now come into the details of what is CAPEX expenditures are. Basically, the CAPEX expenditure is the money company use to purchase, upgrade, or extend the life of an asset. As I mentioned earlier in my slide, they are designed to use to invest in the long-term financial health of the company. So capex expenditure basically are designed for the long-term financial health of the company. These expenditures are the long-term investment, meaning that the asset purchase have a useful life of for more than 1 year or more than 2 years. It depends. When I talks about the capex expenditures, the category could not only be limited to the motors, pumps, drives, which I actually mentioned in my earlier slide. The capex categories could be your computers, your equipment, plant and machineries, upgrading. You required certain upgrading of your plant, building and property, vehicles. They also are the part of the capex. Now, how we do the capex planning and processing, and what are their procedures? I'm trying to explain you in this slide. First of all, being working in the industry, either you are in the engineering side or you are in the financial side of the company, you must have a data of your assets, of your plant and machineries, or you can say uh, all data, including the raw materials, consumables, and with that data, you have to analyze, you have to do the assessment, and you have to do the management in order to have a purchase approval. Now, when I talked about the assessment, it means that you have to evaluate that among your details of all those space category, which one is the asset, which material has a life of more than 1 year, which material has a life less than 1 year, which material actually gives you a long-term profitability in terms of continuous production, in terms of profitability, and from where you can actually reduce your downtime or minimize your machine downtime in order to have the maximum production so that it can reach to your customer, and once it reaches to the customer, it generates the revenue in forms of your better sales. So you need to do the assessment with that. Once you do the assessment, you actually do the management of your data by determining how the cost can be incorporated in your planning, in your processing. And of course, Later on, I will show you some of the templates of the CAPEX planning. Of course, every organization has the different templates, but I have actually have incorporated a template here in my presentation, which I will show you. So once you incorporate the cost, keeping in view of their exchange rates, the variance factor, the landed cost, and all those things, and the plan of your purchasing or capitalizing, you actually process for the purchase approval. So this is the planning and processing of the capex. Now, how you do the analysis? The analysis here are like you do the long-term profit analysis in terms of how much the capex category related items will give you or generate the revenue for the company. The decision of whether to expense or capitalize an expenditure is actually based on how long the benefit of that spending is expected to last. Now, once you do the long-term profit and do the analysis that how much companies must generating the revenue if we purchase this asset, you do the profitable planning. Although capital expenditures are an indicator for demonstrating the level of investment in the company by its management. However, you need to do the planning in such a way that the too much debt on the company can put into the financial trouble. So once you are doing the planning, you have to capitalize based on your financial profit and loss statements, your operating expenses, and obviously that is done by the engineers, especially those who are working in the plant, those who are responsible for running the production and maintaining the maintenance of the plant assets. They need to do the technical and the engineering analysis. So it means that engineers in designing the capex budget have a greater role in that. They can actually develop a better capex budget, keeping in view of the analysis of their machinery based on the downtime, based on the RCAs, based on the MTTR, mean time between repair, mean time between the failures. So these tools, which actually I'm mentioning, that they can actually do the analysis of their assets, and once they do the analysis, they can actually incorporate them into the profitable planning, because capital expenditures that are poorly planned or executed can also lead to the financial problems in the future. So engineers has a greater responsibility in that. Now, I was talking, I think most of you who are viewing my video here, watching my video here, they have heard about the capex depreciations, or you can say the depreciation method. For example, you purchase a car for 35 million rupees, and after 5 years or 10 years, your car sale around 20 lakhs rupees. So it means that your particular capex of the vehicle has been depreciated throughout the years. So if we talks about its basic definition, so its basic definition is that uh, it is the value of an asset which actually decrease over the period of the time due to the wear and tear of that asset. Depreciation is basically an indirect expense charge on the fixed assets in a systematic manner to provide the actual cost of an asset over its useful life. It is basically a non-cash expense forming part of the profit and the loss statement. Example, depreciation of plant and machinery, furniture and the goods, vehicle, motor, vehicle example I have given you. Another example could be you purchase a mobile phone for 30,000 rupees, and after 5 years your mobile phone actually sell over the cost of the 15,000 based on its depreciation value, which has been depreciated due to the wear and tear and decrease in its life, on its actual life. So how we do the depreciation? So there is basically three formulas that we actually applies in finding the depreciation cost. And of course that you, if in the life, if you wanted to sell your assets, you can actually take the reference from this formula as well, from these formulas as well, which we have actually studies in the books. There are three formulas: straight line depreciation method, diminishing balance method, unit of product method. In my case, I basically apply straight line depreciation method, and of course, my financial team also apply this straight line depreciation method. You can also apply that, but I apply this straight line depreciation method along with my financial team in the company where I'm working. So let's talk about straight line depreciation method formula. It is about cost of an asset minus residual value upon the useful life of an asset. Cost of an asset is basically the amount paid to purchase assets and other related expense to bring the asset and the related expense to in a usable position, such as transportation, installation, and the tax. Residual value is the amount that is expected to realize at the end of the useful life of an asset. And useful life is basically expected life of an asset to which an organization can derive basically the benefit of from it. And this is basically our formula is cost of an asset minus residual value upon useful life of an asset. And of course, we will doing the numerical as well here. So this is one of the example I am trying to explain you so that my honorable viewers can get the clear picture of the depreciation. An example here is that a company XYZ purchased an asset of 15,000 US dollars and expected to realize 1,500 at the end of the useful life. The expected useful life of an asset is 5 years. What is the amount of depreciation company should charge in its profit and loss statement? Now, uh, now you must have the question in your mind that how actually you take out the salvage value. Salvage value is basically is the value which actually been realized at the end of its useful life, depend upon the condition of the asset. Now, the cost of an asset is 15,000 US dollars and salvage value is 1,500 and its useful life is 5 years. Maybe it could be the motor. Now you just minus the cost of an asset from the salvage value and divided by the 5. You will get the value of 2,700 US dollars. So it means that the company XYZ should charge $2,700 as a depreciation value. So in order to record this in profit and loss statement each year. So if your asset is selling below this depreciation amount, it's mean that you have actually sell it in a loss. But if it is in between or near to 2,700 equal to, so it's mean your asset has been sell out in a profitable way. So this is about depreciation calculation. Please do comment if you have any questions so that I can later reply in that. Now, what are the OPEX expenditures? OPEX, which stands for operating expenses or the expenditure refer to the cost incurred by your businesses via the production of the goods and the services. These are basically the funds that support your day-to-day businesses. And of course, it matters because it is actually important for running your business smoothly. And for that reason, you must have cost control structures to improve your operational efficiency. And examples of the OPEX can be the raw materials, labor and the manpower, packaging material, shipping and the transportation cost, utilities, maintenance and the repairs, orders, office administration, warehouse and logistics. These are the part of your OPEX categories. Now, coming to the MRO. So MRO has multiple meanings here. I try to explain you here that MRO means maintenance, repair and operation. Supply, which is an important part of manufacturing and services in any industry. MRO is basically an acronym used in terms of supply chain management in order to describe a set of the activities and operations related to the maintenance and the manufacturing. Anything used to manufacture the final product can be regarded also as an MRO product. We can use that terminology in that as well. MRO are the items that contribute to the end product or the services but are not part of the final product. So to explain you more in detail, I wanted to repair a conveyor motor where my final production is actually going to dispatch to the customers via the logistics. So if that motor is actually down and I need to maintain that by installing the bearings, incorporating the new winding in that. So it's mean that the windings and the bearings are the items that contribute to the end product or the services. They actually contribute to the end product in order to make it functional. But they are not the part of the final product. They are not the part of the BOM, bill of the material. So it's mean that MRO is also very important to design in terms of designing the budget or making the budget in order in keeping asset reliable, keeping operational moving. So it actually supports different scenarios and what are the risks of the MROs and the strategies to mitigate are if you have not prepared well or plan to procure the MRO related items in a timely manner by by not designing their budgets or not making their budgets, the risk would be the unplanned equipment shutdowns and strategies to mitigate that implement a preventive maintenance, condition monitoring, and predictive analysis to minimize your downtime. Now, if you have not done that, it could be the frustration among the stakeholders. For example, nut bolts, tools, equipments, they are also the part of the MROs if they are not timely arranged. So the strategy to mitigate is to improve communication, timely update, ensure transparency in the supply chain management. There could also be the risk in inflated finished good inventories, aligning your production with demand using accurate forecasting and the planning. There are bundle working capital in obsolete or unnecessary inventory due to the technological changes. So you need to optimize your inventory, review slow moving items, and implement obsolescence management. So you have to review the fast moving, slow moving, and non moving items to mitigate this risk. There could also be the higher shipping cost for the MRO considering the emergency. So you need to better negotiate and consolidate your shipments and work with a reliable logistics partner. While you have not arranged the MRO or you have no budgets, there could be a risk of loss of productivities of maintenance workers. So you have to ensure availability of the right parts, proper tools, training, and efficient scheduling. Now, developing and implementing improved MRO could be, and as per my experience, is that there must be a user involvement. Requirement must be driven by the user to ensure that to ensure uh, that to ensure there must be the usage of material accurately as per the requirement, and he should be accountable for the usage of the materials and the inventory. User must be partner with the suppliers through coordination with the procurement in terms of supplier selection. The performance measurement of procurement should reflect user needs. There must be the supplier partnerships. I mean, you have to go for supplier relationship management for long-term full service and source agreements should be standards. The number of supplier must be substantially reduced in that remaining supplier must be full partners in aggressive cost reduction and gain risk sharing. While you actually maintain the inventory, there must be a lean environment. Information must be realistic and for the inventory planning, and there should be a central role. There must be a central purchasing where the procurement department must facilitating increase user supplier interactions, the coordination of the suppliers, and consolidated requirement company-wide agreement must be a primary responsibility of the procurement department. So this is a strategy in implementing and the improved MROs because MRO parts are so much they are they are your running procurement part. So that's mean that the budgeting in that is also essential to maintain your KPIs and to maintain your assets planning. For that reason, the end user must have a proper maintenance plan for that. Now, why MRO is important and important to the organization? In general, how important is MRO to your organization is. Without parts, machine don't run. Machines not runnings mean product can't be made, and that's mean money can't be made. So it is extremely important. Actually, in this slide, I have tried to show you that the figures that why this is important to an organization. It is extremely important, we can say 54%, because if there are no parts, there could be no running of machine. So machine is not running so that you cannot do the production. If there is no production, there could be no money. When there is no money, so it means there is no profit, no production, and of course you are going to lose. So 40% of the people thinks that when it works well, no one notice. So when it doesn't work, everyone notice. So 6% of the scenario is related to the that our corporate culture doesn't get it. So it means that in corporate culture, if your production is down due to these due to the stockouts of the MRO parts, so they actually don't care about that either the part was available or not, why the production was down. They only care about why the machine actually gone down. So, or I can say better in that 6% of the people in organizations who are sitting at the top side, they are more care about the productions. They are not willing to listen that due to this shortage of MRO parts, our machine got down. So they want their production running 24 hours. And if we give them any reason of that due to the shortage of the MRO, we can't actually do the production. So they actually don't care about that. They actually only want to have a production on that. So to recap this, without parts, machine don't run. Machine not running mean product can't be made. And that's mean money can't be made. When it works well, no one notice. When it doesn't work, everyone notice. So this is all about that how organization takes the MRO in that. So now this is the CAPEX budget templates. I try to show you here and try to explain you. Every industry has its own templates and it depends upon company to company. So I tried to figure out the budget which could be a standard budget dashboard. So here you actually write the project codes, project description, category, and the departments, the strategies and objectives, priorities, local import price, and the total cost of that, then the percentage contingency, as I was talking about earlier, that there must be the variation in that, and then there is a total amount. Then you must have a plan schedule, the start date or end date, and the useful life and the status of that. So that's how you actually maintain the CAPEX budget. In terms of financial tracking, you can also track your budgets, that your total approved budget is in this amount, the total P committed PO is this, actual spend is this, forecast to complete is this figure, remaining balance is this, and budget realization is this one. So in this way, you can actually track your budget and make your budget and actually do the spend analysis of your budget as well. This is the OPEX part of that. In here, in this dashboard, there could be the annual budget, actual spend, committed open POs, forecast at the completion, budget variances, budget realization, OPEX by the categories. You mentioned the categories description, and then all those budgets and the actual spends, open PO, forecasted completion, variance, and either it is on track or slightly over. You write down, and you actually also compare it with your monthly budget versus actual. So these are actually responsibilities driven by the finance department, and they send on monthly basis to the plant and production. So this is basically the MRO, and it is actually save category description in quarter 1, quarter 2, quarter 3. You can make this budget based on 3 months plan, 1 month plan, 2 months plan. It totally depends upon you that how you actually take it. In this dashboard, MRO budget versus actual. So in this way, you can actually design your MRO budgets plan. So this is all about the templates. I hope you actually like my this video. And if you have any questions, you can write it in the comments so that I can give you the answer later on. So thank you very much for watching my video, and I request you to subscribe my channel as well. Um, Inshallah, in my next video, I will be talking about the spare planning and inventory optimization. Until then, thank you very much and have a nice day ahead. Thank you.